Guten Tag, g'day, good evening, and hello. This is your executive summary for stock setups for Wednesday, the 16th of March, and we'll get right into it. Of course, John Seville from Acorn Wealth here, and we'll have a look at the S&P 500 first. So, again, still tackling this 200-day moving average, still tackling let's bring up the default charting scenario, still tackling the trend lines that are still in place and being respected. Got the 200, the overhead trend line, the ascending wedge trend line, and of course the upper trend line here. So nothing much has changed in the last 24 hours. We had a bullish close on the market on very light volume. I mean, the volume over the last few days, we've evaporated from 4.38 billion, 4.08 billion, 3.49 billion, 3.57 billion today. Now, in the cross movements of the market, the S&P might have closed positively, but the high yield bonds did not. Those drop and in fact gapped down. Of course, also the Russell 2000 IWM, we used to measure that, also in a bearish movement as well. Obviously, not getting anywhere near the highs that the S&P 500 has enjoyed. And let's just have a quick look at that. Yeah, coming up to the previous head and shoulder resistance as well. If we just draw that crudely there, you can see we're right into that area also. So the week ahead is the same tonality as I've been saying in the last few executive summaries, a week of caution. I would be very careful about loading up on any positions, short or long. I'd be taking profits on positions that are close to their targets, short or long. And I would really let the market tell us where it's going next, because we've got the Fed tomorrow. That could be a shift in the market. We've also got open range that gets set on Friday, being the third Friday of the month, options expiration. We get a new open range date. And the interesting thing about this open range is it's almost as valid and long as the first. The third Friday basically falls smack bang in the middle of the market. So we get 9 days of open range trading, as was exactly the same then as previously. We got 9 days of open range. A little bit more than that. But you see my point. We get an extended period, whereas in some months we're going to get a week between options expiration and the end. So a good couple of weeks of validity, then open range again on the first. So ample time to make some good trades. And I just don't see the risk-reward being in our favor to jump the gun with these two important days ahead. So that's my feeling on the market. Now, looking at some of the key stocks, BCRX. This is one we talked about in Trading Room already, about taking some profit when it was up around $3, because it had rallied already very hard and the options were up significantly. However, if you did not take profit, it did hit the stop loss today at $2.58, which is still a magnificent return, up from $2.13, I believe it was. Just checking my notes. Okay, where are we? BCRX. Yeah, 215. So still a 20% rally, so nothing wrong with that. But if you got out at a higher level, then well done for you. Now, ALDW also was one we commented on last night. We talked about updating the stop loss. Very impressed with its movement today. Obviously, it seems that yesterday's reversal was simply selling pressure as it stormed through the Fibonacci. Now, that selling pressure was then met with buying today, with the volume jumping about 30%. And rallying straight through that. The high yesterday of 14.19 broken, 14.25 the high today, and so that should tack on and reach its target at around 14.90, I believe it is, or somewhere close to it, and looking good. While I hit its stop loss as well, CVRR, we had updated the stop criteria to 12.03. The entry criteria was 12, so no losses here, but it did stop out. Something to be aware of. This could be a possible day trade to make a buck on. You know, if it breaks especially if it breaks the moving average at 12.26 and then 12.44. It's not far to go, and it could easily tack on an extra $1 from there. So especially if you see a break at 244, it could easily rally up, and we could be rallying up into the 13.47, 13.43 mark. So again, about a $1 move potential. So there's a potential day trade there. Bearish consolidating candles, bullish close today at the top of the range, bouncing off the moving average. So it could be a secondary potential snag there. or scalp, I should say. TNXP did not trigger today. There was an error in the newsletter. This obviously was sent out for Monday night's alerts. Did not break to 253, so did not trigger today, and that was why I was waiting for it to break the moving average. Really needed to see, that strength continue. It did not, and that shows you that the momentum has continued to the downside, at least for now. Okay, TYL. On my shortlist, I still own puts in this. I talked about updating the stop criteria. Today it hit 126.20. So you can see why I was nervous about that 126 area in a stop criteria, because it still needed to, and very validly, that's not a word, someone needs to teach me English, why it would have still been a valid trade if it rallied into that area. Now, it had a nice close today. Again, it could still fail, but so far so good. It's acting good, and acting based on how the rules would dictate. Okay, so I only have two to talk to you about that are on my watch list. I want to keep it fairly thin this week until we get the probabilities in our favor. I mentioned this in Trading Room tonight. You're all here. You're all learning from us to learn how to have higher probability trades. Now, when we know there's an 80% probability on our side, or somewhere close to, if once open range is dictated, we are going into a lot of improbable days ahead. So, again, I'm only looking for ones which really grab my attention. Not a lot has. TYL, this SWM, which is my long, I have on my watch list, is what I'm watching. It's obviously had a big drop. We do have some smart money buying that should have occurred at this price. It didn't really. It's holding this area, but right now the signs are still negative. But and possibly this could be something that we end up going short on. You can see here that we've actually got a possible descending triangle where we have equal lows and lower highs. So a break below 29 could actually be a short signal on this one, or a break above this 9-day moving average could be a long signal. But it's on my watch list for a trade in either direction, and as a technical analyst, I really don't care which, just want to make some money. But there's one on your watch list. One that might be a little bit more closer to actionability, and I'm going out on a limb here because I'm part of the payment system space. I hold some shares in an online payment company, so I want them to go up. This one, Global Payments, does look like it's breaking down. So I spoke about this in Trading Room. A break below the low of today's candle and a stop, which would be a low of 58.34, so looking at 58.27, down to a target of just above 54 here, the 54.01. So you're looking at 54.13. We've got some, also you'll have this in the stock report tonight, and I'll be looking at a stop criteria above the high of today's candle of 59.60, so looking at 59.67. So basically that's the long and short of it, ha ha ha, I'll see you all in the executive summary tomorrow. Happy trading, and good night.